this video, I'm going to walk through an example of activity-based costing versus traditional costing. This company manufactures two different models, FS08 and 48. And so what they've noticed is the company's meeting more resistance for the pricing of SF08. And so our assumption is that consumers feel like the price is too high, meaning we probably identified too high of a cost related to it also. Although there seems to be little need for negotiation on the price of SF48. And so again, our suspicion is that this one would be underpriced and undercosted. They just want us to look into that to have an understanding. Currently, we're using traditional costing to apply manufacturing overhead, just using one plant-wide predetermined overhead rate and basing that on direct labor cost. And our most recent month of manufacturing overhead was $180,000. They also note our production levels of each model, 8,000 of the 8 model and 2,000 of the 48 model. They give us the breakdown of direct cost. And if we determine we want to use ABC costing and they want us to just explore to see what differences it creates in costing, they'd have identified 3 different cost pools, one related to direct material costs, one related to the number of production runs, and the third is related to the number of inspections. In the first scenario, they want us to apply overhead using this ABC costing, again, just to see if there's any differences created. Well, the first thing we need to do is calculate for each of the activity pools. And so for direct materials costs, we're going to take the overhead assigned to it of 50,000, divide it by the total of direct material costs. Now that was 160,000 for the 8 model, 90,000 for the 48 model, adds up to 250,000. 50,000 divided by 250,000 means that direct material related overhead is going to be applied based on 20% of direct materials cost. In this example, for the 8 model, we would take the 20% of direct material costs, multiply it times the identified direct material costs of model 8 of 160,000, and assign $32,000 worth of overhead related direct material costs. Very similar for the other 3 pools. Production runs, $54,000 in total, divided by a total of 60 production runs, means $900 per run. Inspection related, 76,000 divided by 19 total inspections overall is 4,000 per inspection. Looking at model 8, production runs, $900 per run times 20 runs for model 8 is 18,000 of production run related overhead assigned. Inspections, $4,000 per inspection times 8 inspections for model 8 is $32,000 of inspection related overhead. Adding these 3 together, 32,000, 18,000, another 32,000, we would assign $82,000 worth of overhead to model 8. So that's one question answered. They also want us to calculate total cost per unit, not just overhead related cost per unit, but total cost per unit. So beyond our overhead, we want to add our 2 direct costs, direct materials of 160,000, direct labor of 120,000, again to that prior manufacturing overhead total, and that would mean total manufacturing costs would be 362,000. Dividing it by the number of units produced, which we previously said that 8,000 units of model 8 would be produced, 362,000 divided by 8,000 means using ABC we'd assign an average of $45.25 per unit. Now let's compare this. I'm going to go ahead and let you do model 48 on your own. Let's compare this to what we've been doing with traditional costing. For traditional costing, we're using one plant-wide predetermined overhead rate, and if you recall, we're assigning that based upon direct labor costs. So instead of separating the overhead out into 3 pools, we're just going to take that $180,000 worth of overhead divided by total direct labor costs, irrespective of each model of 200,000. And so overhead under the traditional system would be applied at 90% of direct labor costs. Our direct materials and direct labor don't change based upon how we're assigning overhead. It's still 160,000 of material and 120,000 of labor. Our overhead application does change. We would take the direct labor costs for model 8 of 120,000 times 90% of direct labor costs and now assign $108,000 of overhead. Adding it to our direct cost, total cost overall under the traditional system was $388,000. Dividing it by 8,000 units produced is $48.50. So if you recall, just about a minute ago, I calculated that using ABC. And again, the only thing that's going to change is the overhead application, nothing different for material and labor. Under ABC, it was only $45.25. So go back to the beginning of the scenario. They were thinking we were overpricing and thereby probably overcosting Model 8. This is telling us that it's not a huge jump, but a few dollars is in that might be tight enough to create a problem. It does appear like we had been overcosting and therefore overpricing Model 8. Again, I'll let you explore the second model on your own to see if what cost then gets shifted over to Model 48.